Right, welcome everybody to the Pepperstone live event here where we're discussing two of the main indicators that we like to use here in 2025. It's great to have you here. It's been a very volatile market, and today we're discussing moving averages, anchored VWAP, and of course the live markets. Bitcoin, crypto, stocks, what's going on in, of course, currencies, gold, silver, and all of these other things. We've got some big answers today, and my name's Thomas Atkinson, as always joined by Tyron Abella. Tyron, what a couple of weeks it's been. We've got government shutdowns, we've had big earnings, which have been incredibly good, and we've actually had some big sells that have come into some key levels that we'll be looking at today. So it's been a bit of a bonanza in terms of trades, hasn't it?
Absolutely. Welcome, everybody. Yeah, look, the volatility's been really good, but really behaving itself in a way where it's very tradable, actually. And I think that's probably the important thing. We always want to see a tradable market that is actually volatile. So, yeah, we've got the best of both worlds at the moment. And nearly everything is actually, even, Bitcoin's been fantastic. I know we were talking about it at the last webinar, and it's done all the things we hoped it would for us. And here's the S&P, following that 20 moving average like a cuddle blanket for a child, trying to push up again, despite a government shutdown that's at a new record length in terms of days. There's still a lot going on, and we've still got a few more earnings results to come as well, haven't we, Tom? So there's still a bit going on here.
Yeah, we absolutely do. And so far, it's been really one of those earning seasons that's been doing that 80% plus beat rate. Now, I always say that you never top a market when you've got earnings still on the increase. So generally speaking, there is real potential here in terms of the way that the trade is currently going. But let's talk about replication. And of course, we'll start off here with one of our indicators of today, which is of course moving averages. Now here, we like to usually use about 3 moving averages on the charts. Of course, there's so many different types of ones, but I'll write them on the chart for everyone. It's the 20 EMA, the 50 EMA, and we've got the 20 and the 50 on this particular chart, red for 20, blue for 50, and then the 200 SMA. And the main differences between each one of these is obviously the EMAs are a little bit more weighted towards the most recent price action, and the SMA is smoothed across the whole point. The 200 is probably, I would say, the most well-used general lead indicator for trend change. And then, of course, in terms of if price is above it, usually people are looking at that as quite a bullish market, especially in stocks. And the 20 is what we also call on the weekly 20 moving average, the mean reversion level. So these are heavily used in the industry, Ty. We've been using them now for well over 15 years. It was probably one of the first indicators we actually really learnt about even before that. And I've got to say, it's still stuck with us to this time, hasn't it?
Absolutely, and I think it's stuck with us because it works, Tom. I think we've proven over a long time to ourselves, which is the most important thing. You have to prove to yourself, of course, that it does actually work, and you can have faith in the way it holds up, both in an uptrend and in a downtrend. By the way, it's not just limited to uptrends only. It works just as well in a downtrend, and I think it's given us the confidence over many years now that it is stable. And when you do testing as well, it's stable for the longer haul. It's not just stable for the last 15 years. It's been stable for the last 80, 90, 100 years since we've been using them when you go back in history and see it. And I think anything that you can rely on in that regard is a very big plus, and we love them. If they were the only indicators we had to work with, I think we would be just fine.
Yes, and these have been really fantastic. In recent years, we've also noticed anchored VWAP has been very effective as well. But why we bring up moving averages here today is because, of course, we hit so many different moving averages. In particular, I want to look at the NASDAQ here on the TradingView connected with Pepperstone platform. And you can see here that we've got the 50 moving average. We hit one. What's that?
The screen's got both cameras on.
So okay, we'll just grab that back. Well, it does seem to happen sometimes, unfortunately. That's all right, guys. We'll be back in a second. Here we go. And there we are. So we should be able to see it. Can everyone see it again? Hopefully it's all good. Yep. So we've got the 50 moving average here, and you'll notice that, of course, it's hit it once back down here in September, then we rallied up through, and then, of course, we saw a kind of test here that came in through the point here in early October kind of area with that, of course, tariff kind of crash that we saw. Then we got a new high. Higher high, most importantly. And then we came back down last week on Friday and hit this level. Now, it just so happened there were many different confluences. The 50 moving average just so happened to show that. But as we always say, you want many different reasons to be involved in markets. And one of those reasons is to have something like an indicator of some kind. The other reason is to have some kind of support or traded level. And in this case, we actually had the 50. We had a pretty interesting zone through here. And I'll just show you using this chart, which will take a fixed range volume profile, which is the most traded zone, which we obviously hit into. And we also have a psychological level being the 600 on the most traded exchange traded fund for the NASDAQ, which is the triple Q. So the QQQ for anyone outside the US, people don't always know what that is, but that is the NASDAQ. And we hit that level and we found a bounce. Now, in the smaller trading area, let's have a look here for a second, because not only was the 50 really cool, but we saw it hit on the S&P 500. We saw it also hit on many other pairs, including some single stocks, which we'll look at in a moment. But let's take a look, Ty, at the Qs, because I think this is probably where we get the biggest evidence that maybe this market does mean some business. And that's particularly when you look at this 4-hour, which was a gap down and a gap up, giving us that island style reversal. Now that does open up, of course, potential pullback later on into rally, because you've now got gaps everywhere. This is actually quite a strong setup. We've had a few of these in recent times, back in August, back in September, and then of course over here where we are right now. And it does bode fairly well, doesn't it, for the current uptrend? Do you think it's still intact at this stage?
Absolutely, it is. We haven't seen the lower high, lower low sequence that's required to change this trend, and I think that again, you can talk about moving averages there. You can see that the 20 and 50 have done a very good job of bolstering it up, and even when price did get down below it just for a little bit, those islands that you're recognizing, which are generally high volatility events, it bounces straight up above it and off it goes again. So really, we're following a pattern that's played out several times now, and there's no real reason to think yet that you anticipate only good news from the US markets really now from moving forward. I mean, the earnings have been relatively steady. I don't know if the back end is going to be awful. I mean, the government is eventually going to open, I'd like to think. So there's no real reason to think there's going to be a massive sell-off. And I think that bullish behavior where it does gap up quite significantly like that is actually very positive for it.
Yeah, I think it is too. And I think also that the fact that we've got these technical signals stacking on top of each other is quite positive as well. Now, we did say that not only do we like those moving averages, but we also do tend to like the anchored VWAP. And you can get that inside of the TradingView platform by clicking around in here. And you'll notice that, of course, when you're going through, there's different things down the bottom. And one of these, which is the Fibonacci one generally, has volume-based anchored VWAP. And what you can do is you can pop it on, let's say, a low or a high level, and you'll get kind of something that's tracking, kind of like a moving average, tracking the current price action. And what this is it's kind of market adaptive. That means that if the market now pops down to this because of the strength that's being involved in this market, there's a decent chance that this could be used along with other techniques to build a complement storyline. So it's a very key level, of course, that we're looking at here on the markets. And I'm certainly paying a lot of attention to what's going on, in particular around the 25,300 over the next 24 hours to 48 hours. As you can see here, this anchored VWAP could be an interesting zone. So, Ty, we've seen island reversals on the S&P, island reversals on, of course, the NASDAQ as well. And we have also had some correlations come in from other markets. Most notably of that probably has been the crypto markets, which all took a massive nosedive. Now, I personally was just looking at this and finding that we've got some interesting zones, coming up at the moment, which is obviously what's going on here in Bitcoin at around the 100,000 marker. And you notice that we've come down to a support line here, key technical support or demand level, key psychological level, and we've actually formed like a little double bottom base. Now, I still think it's a little bit early to tell because it has been in a sell-off, but we've got some key zones coming up. 111,000 for Bitcoin soon. If it breaks that, could start to make a higher high and therefore change the trend towards the direction of the upside. And we've also noted that it's currently at that kind of supply level. So, Ty, what are your thoughts here on Bitcoin? I think 93, 94 still open, but it's starting to look a little bit more encouraging, isn't it?
It is looking more encouraging now. I think that it's important that it probably maintains its shorter term momentum. I think that the higher highs and higher lows need to keep forming at that level where we can be confident there's enough momentum to push it up. I think a breakdown now, I'd be very, very cautious. If it broke down lower again and got below that 100 again, I think then we're probably looking at 93 as the next target. So I think it needs to hold up. It's looking better, but it needs to be. I think another swing down, I'd be starting to get quite concerned for it. So right now we've got momentum on the way up, though, and I agree. I think we could, certainly push up to, back to that 115 and a half beat. Really, we know it can happen very quickly, but I'd be very wary if it broke down below 100 again. I think I'd be starting to get very concerned about that.
Now, the reason I bring up the 100 is, remember, we've got a psychological level there, but we've also got a 50 moving average there. Now, this time it's on the weekly, but you'll notice that we hit this level, and it's very key because, of course, it's the type of area of interest. We've got a 50 weekly moving average, we've got a 50 weekly moving average, we've got a 50 weekly moving average. Again, one of those kind of replication events. And when you go through and you look at all the 50s, you'll notice that it's hit it quite a few times. So again, just a really excellent moving average, excellent indicator to have on, and you can see the power of how that has been since really Bitcoin started its rally all the way back down there in the 20s and 30K ranges. So it's been a while in terms of the run, but it's been pretty nice.
Absolutely.
Yeah. All right. So crypto, whether you're looking at Ethereum or you're looking at Solana or you're looking at Bitcoin or you're looking at any of these things, Ty, most of them have very similar setups. Almost all of them have these kind of base bottoms that are broken up. A lot of them have problems in the future. Notably, of course, Ethereum has that 3850 kind of zone. So certainly some key levels to be watching very soon. Let's move from there, though, over to gold, one of our favorites on the show for 2 years, I guess, 2.5 years at this point. We've really liked gold. It's been very, very strong. Again, technicals have come out to play. And actually, I'll just move to silver just to show first up the power of, again, the moving average of the 50. 1 touch, 2 touches, 3 touches. This on the daily this time. Very good support. We actually kind of thought about this. I think we spoke about it a few weeks ago and we actually hit it, which is exactly the kind of level we were looking for. And silver just had, and so did gold, a very heavy buy up over the last 24 hours. So let's just put a couple of anchored VWAPs on some levels here. And we can see here that we've got kind of this zone that if price does pull back now, you're probably going to start to find some buying pressure around here. And also, for a lot of people, although it does have a kind of far further right down shoulder, this will now be seen as an inverse head and shoulders. And funnily enough, Ty, the distance of this kind of goes back to the top, which really does still signal we're in a range.
We love it when it does that. We love it when the pattern's proof to a previous high. Are very, very nice. Well, I like it a lot. And gold is painting a very similar picture.
Yeah, and silver and gold obviously have been doing this. So gold doesn't have the same pattern as much, but look at it come back into this 4150 area, a very strong zone for gold, and obviously something that I am paying quite a lot of attention to, and I'm sure you guys are as well. Key level of supply, key level of resistance. This is the type of zone or area that I'm always paying a bit of attention to when it comes to the charts. And again, when you're looking at indicators, you're seeing here a 2050 cross on the 4 hour. That's a positive. Why? Well, when was the last time it actually did this? If we actually go over to the left-hand side, you might note it's been a while. So it crossed to the downside, but when it crossed to the upside back all the way, I think over here, what was it, August or something? Yeah, August to the upside. It actually went on an epic run where the 20 and the 50 stayed bullish until around the 23rd-ish of October. So it was a pretty strong run from it. From, of course, what we've seen here in everything to do with gold, silver, we've also got, of course, strength in other markets at this stage. We've seen quite a few of the biggest tech stocks, particularly things like NVDA, come down to also key moving averages. You'll notice here, daily 50 again getting hit on the NVIDIA stock, and it literally was making a series of higher highs and higher lows all the way through. Very, very nice sequence of events when it comes to the market, obviously rallying off this point, and certainly confluence again with everything we've been seeing. Microsoft also came down and tapped into a really key level of demand. So this is again just showing you confluence was hitting across the board, whether it was Bitcoin on its weekly 50, whether it was S&P or NASDAQ or Microsoft or Meta or NVIDIA or semiconductors in general. They were all kind of hitting on support. So we see how important it was that in essence, the level was purchased or at least bought up for the bull's sake. Because if we drop levels like this, like look at Bitcoin, Microsoft here, if Microsoft dropped this, then a lot of you are going to be saying, well, that's a double top and we're going towards, more significant weakness. So it just shows you how we often get to these levels and then we really see the hand that comes out to play. But again, moving averages have really helped to build and define some of these zones along with anchored VWAP. We got a question here coming in from Craig. He says, hey, Tom and Tyrone, I've been trading WDS, which is Woodside in Australia. It's a natural gas and oil company. And the entry price of 22.15, and it's been leaving gaps. Well, we'll actually have a quick look at Woodside because it has been, it leads us into oil. So we'll have a look at oil in a moment. But we're not getting, there we go, WD lagging, guys. All right, there we go. And you can see here that he's picked it up in the 22.15 level. So he's been pretty bullish on it for a while, pretty much at that, right on those lows. So maybe he's even probably using a fib and some other things there. But you've got a pretty strong market. Now, his comment is that it's been gapping on the way up. And the thing about stocks, and I think the reason I wanted to bring this up, is that you often do see gaps, especially in commodity trade stocks. And the reason you get gaps and they don't have to necessarily fill is because, of course, you're seeing the barrel trade outside. So this is Australian stock. It trades in Australian time, tends to be a bit of a weaker period of time in terms of liquidity in the markets, the Asian session leading into the London session. The London session into the New York session tends to be where you get a lot more oil move per barrel and you get a lot more natural gas move as well. So that's why you get a lot of these gaps. I don't think you necessarily have to get these filled, but I can see your point that there are quite a lot of them. What I always say to people is have a look at the other side. So, if it's been, like, let's say it's been rallying in the past and it filled the gap all the time, then that's of course a good sign that's probably going to fill it again. And if it hasn't been filling the gap in the past, then of course you would look at that and say, oh, well, we haven't filled the gap. So in general, we wouldn't be thinking it's going to do it again. Remember, look at the previous trade history to learn some of the evidence-based approach that we always look at. Some other positive signs here, 2050 cross, and we'll just have a look at the higher time frames just so everyone can get an idea of the indicators and why we kind of use the 20 and the 50. And you'll notice here that on the way down, it really held that 20. I kind of knew it did, but it held that 20, and that's because the weekly 20, remember, is what we call mean reversion. It's probably the most powerful replication moving average, especially when it comes to trend following in single stocks and indices. And you often do see this level be respected on the way up and the way down. And it certainly was on the way down. Then it broke through here really strongly. And that actually has helped make a base and form a base here. So pretty cool stuff. Let's have a look at oil barrels. Oil barrels have been, I think, pretty boring recently in comparison to a lot of other trades out there. And the way I look at it is it's currently in a downward trend, but we're on a very heavy level of support. So around this level down here is pretty much exactly where you would expect the market to find heavy levels of demand. And this is exactly where we have started to see some buyers. You've got triple tweezer down here. Obviously, another thing you could do down in these lows, guys, is you could have put a anchored VWAP, and that would have helped you to like this level a little bit more from the bullish side. You could also have some from the top as well that are coming down. So you'll notice that's going to be giving a couple of those shorts in there as well. You could also have one from here that gave you the initial short. And I always say the first anchored VWAP touch is the best one. So here's the first one. Here's the first one off that. Here's the first one off this. And you can see that they have usually stronger reactions. In this case, we don't know whether the barrel is going to continue to go up because it's obviously in a downward trend, but I'd be watching the 63 in particular because that is a key level of resistance. So certainly a key zone to be watching on the charts. So some cool stuff there on oil. Very neutral at this point, but clearly something going on in the stocks when you compare it to what's actually been going on in the barrels themselves. So far, guys, we've had a look at gold and silver. We've seen how the moving averages have affected those. The US market obviously looks quite bullish from the moving averages again. And then, of course, we've got crypto that's hit things like the weekly 50 in particular. And then we have US oil. But what about the dollar? How's the dollar going? And I think this is a classic case of why you want to be paying attention more to, of course, the price action more than the press. So if you've been following the dollar for a while, you might know that a lot of people are saying that the dollar is dead or fiat's gone or any of these types of things, and people have been pretty bearish on it. Well, that bearishness kind of culminated in this becoming the most popular trade just a few months ago. So around this July period, more people were shorting the dollar than almost any time in history, and people were really negative on it. And since then, it's actually based in terms of structure. So you had this extremely bearish sentiment. You then got, of course, a rally, a drop, very interesting bullish hammer here. And we've actually formed now a potential base structure for the dollar. You can see how important some of these levels are. Double bottom base could be. What types of things can you do here? Well, you're going to be looking at things like your moving averages. Has it broken through the weekly 20? Yes, it closed above it here. It also closed a weekly high above this high. Again, is a little bit stronger. And now we've hit the 50 and we've rejected that a little bit. So you always want to go over history and see whether it's respected them or not. And in this case, I would say the dollar is not respecting these moving averages as much as those other pairs. So therefore, it wouldn't be a stronger read. And I think it's very important to do. Always use the left-hand side to build that base case evidence that you're looking for. Let's take a look at the 4-hour, though, for a second on the chart. So we'll bring that up. We'll check out that 4-hour. It does load there, and we'll have a look because, again, this is a classic case of where you can start to use things that aren't just the anchored, or so aren't just the moving average, but we could use the anchored VWAP. So you could put anchored VWAPs underneath these lows, and again, you'll notice that on the way up, it's been okay at finding pretty close to the type of level that you might want to be at least thinking about. You can see here the one off the low, one, best touch, by the way, second touch, third touch. We've got quite a lot of pretty heavy support each time it's come down to these anchored VWAP levels. And I think it's just a nice way to use them, especially if you've defined a trend. So as you define a trend, let's say you believe the S&P 500 is in an upward trend, then anchored VWAPs can be quite a powerful way of getting into those trends and, of course, following those trends. It's just one level of confluence. It's not the be-all and end-all, but it is something that you can certainly pay quite a lot of attention to and add it on top of your overall existing stuff.
Yeah. I think you bring up a very good point there, Tom, that it's got to be in a trend in the first place.
I'm
back. But yes, you really want a trend established already in the first place before you start using them as a trend following tool, because VWAPs aren't going to do you much good in a sideways market. Just like moving averages, they parallel ribbon. But when you know or you feel that there's a trend in place, it makes a big difference to actually apply these VWAPs, because they do give you those levels, like we can see in this example, of really good support levels on the way up, and they can be important on the way down too. But it's important that you know a trend is established.
Yes, yeah, you must know a trend is established, and some of the techniques that you can do on that is the price above or below the daily 200. Are you seeing a 2050 cross in the direction of up or down? That often helps just to do it as a quick cross check before you actually look at the price action. And obviously, are you making a series of higher highs and higher lows, or lower lows and lower highs? So at the moment, we have quite a lot of established trends. I mean, if you're looking at the trends, you'd say, of course, stocks and stock market are generally bullish. Bitcoin is probably a little bit more neutral at this point, waiting for that next directional trend. But in the weekly and monthly, you're still going to be generally looking at the bullish side. Gold and silver still large time frames bullish. Daily, though, would be more kind of like sideways. So therefore, you've got 2 of 3 established. And then, of course, we've got oil, which has been, I would say, mostly just bearish. But that could be about to change potentially on the daily time frame. So know your time frames, know your changes of trend. An easy hack way of doing that in 2025 and 26, which we don't believe anyway it's going to be affected too much by AI or robots or any of these other things, is going to be start using your moving averages, start using your anchored VWAP, and then building price action on top of that. Remember, keeping it simple is actually a great strategy. The reason why is because they often say the trend is your friend, but more importantly, you need to be following that money flow. And often when markets break in the direction of trend, they do so with more power. They do so with larger moves, more importantly, because the move is usually bigger. If you start to think about that, that's actually very helpful. And of course, it's actually, it may seem like it's counterintuitive and it's stupid to go with the direction, but oftentimes I find that what traders and investors try to do, we all try to beat the market from the idea of we try to make sure that we are being maybe a contrarian for contrarian's sake. Just make sure that if the charts aren't agreeing with your contrarian view, then it's probably not the best idea, generally speaking.
It's a very common mistake, isn't it, Tom? Like a lot of people try to reverse the market and thinking that it can't go higher, or you're going to make more money on the way in reverse, but it's actually not the case. And it's a tough lesson. A lot of people learn it the hard way, but realistically, a trend doesn't have to stop anywhere. And when you know one is established, going in the direction of the current, it's like the rivers. We talk about it all the time. We say, if you're swimming with the current, it's going to be a lot easier time, and the trend is no different, really. So, yeah, you don't want to be a contrarian for contrarian's sake.
Certainly not. All right, guys. Well, we've covered off some of the majors here. Obviously, you've learned a little bit about how we use anchored VWAP. It's not, totally changing the landscape, but it is a good additional into the direction of trend. That would be one of the tips. And of course, we looked at 3 moving averages and how they could work with the current price action. Some really interesting points coming up. Bitcoin certainly worth watching, and of course, we've got some very interesting moves here in single stocks and also gold and silver. And some of the stats that we've shared recently, of course, with gold and silver as well, have been very enlightening, I think, and interesting, because that was a big rally. And remember, while that can bring a sideways action for a while, which is like a pit or a sleep for the indicators before the next move, the direction of trend has been quite established now for a couple of years. Guys, from everyone here at Pepperstone, thank you so much for joining us here on Tactical Tuesdays. We will see you in 2 weeks' time for this. And remember, next week, we'll also be coming back at you with the macro show as well. So make sure to subscribe and click the like button down below. Put your comments if you have any. And thank you so much for watching. Ty, any words of wisdom for everyone before we end the show today?
No, I think only that we still have to trade with a bit of caution because of the uncertainty around the closure and also a little bit more earnings to go. But I really feel that over the next couple of weeks, we're going to get a lot more stability in the market. So I think by the time we come to you again in a webinar, I think the markets are going to probably settle and start to pick a direction. And I think they're going to give us some easier times to get into. So just trade with caution up until then. I think you just have to be a little bit more vigilant right now.
Awesome, guys. Thank you so much. We'll see you in a few weeks' time. Bye for now.
Thanks, everyone. Bye.